Hello and welcome back to our channel. Today we will talk about how to buy a house when you already have a student loan to pay off. Don't worry, we will tell you the ways for the same. So, how can you buy a house when already there is a loan to pay off? It can be tough to get a mortgage if you have a lot of student loan debt. However, you may buy a property with student loans if you make sure you don't take on more debt than you can afford. You may make appropriate decisions for your financial position by carefully analyzing your options and studying the best practices for buying a house while carrying student loan debt. If you have a lot of student loan debt and want to buy a property, here's what you do. Number 4. Keep a check on your credit report and keep improving your credit score. Your credit score is the most crucial factor that financial companies use when deciding whether or not to give you money. Fortunately, even if you have student loan debt, you can keep an excellent credit score. In fact, unless you've been late on payments, your student loan debt is unlikely to affect your credit score. But how do we improve it before you apply for a mortgage? Number 4. Make sure you pay your payments on schedule. Payments made on time have a huge impact on your credit score. You can establish a great financial reputation by paying your bills in full before the due date. Number 3. Maintain your control of your credit usage. Your credit usage is the percentage of your credit balances to your total available credit lines. For example, if you have $3,000 in credit lines and $1,000 in credit debt, your credit utilization is 33%. In an ideal world, you utilize as little of your credit as feasible. Number 2. Owed accounts should not be closed. You may believe that canceling a credit card account is the best method to improve your credit score, but this isn't always the case. An owed account can enhance your credit, especially if it's in excellent standing. The better your credit score, the longer your credit history is, and the older the average age of your account is. Number 1. Make use of many forms of credit. There isn't much for lenders to judge if you have a thin file and have had little credit in the past. A combination of revolving credit, such as credit cards, installment loans, such as auto payments, or student loans, might demonstrate your ability to manage several types of debt. Before buying a property, it's also crucial to track your credit score and run a credit report. Make sure your report is correct and current. If your credit report contains information about transactions you never performed, you can ask the credit agency to erase the information as well as any inaccuracies. Number 3. Decrease your debt-to-income ratio. Like student loan refinancing lenders, a mortgage lender will analyze your debt-to-income ratio to determine your ability to make monthly mortgage payments. When purchasing a home with student loan debt, you must consider the impact of your debts. To assess if you're eligible for their best rates, several lenders use the 28/36 qualifying ratio. This means that total housing expenses should not exceed 28% of your gross monthly income, and all of your expenses, including the new mortgage payment, should not exceed 36%. If you're not sure where your DTI stands, use a DTI calculator. If you don't fulfill the 28:36 rule, you can still buy a house, and some lenders will still loan you money if your DTI is high, but you'll have to decide if you're comfortable taking on a loan with a high DTI. If your DTI is too high, there are a few things you may do to lower it. Number 3. Take on a second job, start a side business, or ask for a raise to supplement your income. Number 2. If you refinance or consolidate your student loans, you may obtain a lower monthly payment and a better interest rate. Reduce your monthly payments on your federal student loans by enrolling in an income-based repayment scheme. You may free up cash flow and make your property more affordable by increasing your income and reducing your debt obligations. However, these procedures will only help if your mortgage lender considers your monthly student loan payments. Rather than considerably your monthly payment amounts under an income-driven repayment plan, some mortgage underwriters base their decisions on a percentage of your overall student loan balance. If this is the case, you may need to shop around for a lender to get authorized for a loan. Number 2. Pre-approval is required to assess your home buying ability. A lender's pre-approval will assist you in understanding the prices and down payment requirements. Most lenders evaluate your 2-year employment history, credit history, income, and assets when determining your eligibility. When applying for a pre-approval to buy a house with student loan debt, keep the following points in mind. Number 5. Most parts of your financial history must be examined by a lender, at least in the short term. All funds must be tracked down and explained. Any substantial deposits made outside of your usual payroll will be rigorously reviewed, as will any major loans. Number 4. First-time homebuyers, gifts from family are common. These too must be sourced and accompanied by a gift letter from the lender. Lenders aren't intended to accept loans as down payments, so if a relative sends you the money for a down payment, it won't work. the down payment should be a gift if it's not from your own cash, and it should be from someone you know well. Number 3, check with the lender to ensure you're providing all of the paperwork required for a thorough conclusion of your pre-approval. 2 years worth of W-2s, 2 years worth of federal tax returns, 30 days worth of pay stubs, and 2 months worth of asset statements, including bank and retirement account statements, may be required. Number 2, if you're self-employed, you may need to provide additional documentation to prove your income. You may also be subjected to an income audit, in which an accountant examines your documents and validates your earnings. Number 1, whether you go forward with a loan, you should check with the lender to see if there is any further paperwork you need to prepare once the loan is underwritten. You can utilize your pre-approval to assist you in choosing which properties you can afford once you obtain it. Additionally, once you get pre-approval, sellers are more likely to take you seriously because they know the bank has already committed to supplying you with finance. Factor in private mortgage insurance costs. Although the traditional rule of thumb dictates a 20% down payment for a property, you may be able to put down less money up front. If you have a lower down payment, however, you may be required to pay private mortgage insurance. PMI is a monthly premium that is added to your mortgage payments to safeguard the lender in the event that you default on your payments. If your down payment is less than 20% of your home price, remember to include PMI when determining how much house you can buy. Number 1, take into account down payment assistance programs. There are a variety of down payment help schemes that lenders accept. Many governments and cities provide these, with some allowing you to use sweat equity to create a new home. Even if you have student loans, you may be able to benefit from federal loan programs. You might be eligible for an FHA loan, which requires as little as 3.5% down payment. If you want to buy in a more rural region, you might be eligible for a USDA loan, which requires no money down. If you've served in the military, don't forget about the VA loans. Find out what programs you qualify for at the federal, state, and local levels by researching your options and speaking with a qualified mortgage broker. But is it right to buy a house when you have to pay a student loan? You must first determine whether you are ready to become a house owner, even if you know how to buy a house with student loans. Determine whether you are comfortable with carrying 2 large loans for an extended period. Do you have faith in your earnings? Is it big enough for you to comfortably pay a mortgage on top of your student loans? Examine your priorities as well. Will you have to reduce your retirement contributions if you buy a home while also paying off student loans? Will you need to make adjustments in other aspects of your life? Consider what is most important to you and make plans appropriately. Make sure to look around for a mortgage as well, since a reasonable offer will make home ownership that much more attainable. But most importantly, realize that if you have a plan for buying a home, there is no reason not to. Go ahead and achieve it even if you have student loan debt. That's it for today's video. So, are you going to buy your own house now? What is your opinion on whether or not you should buy a house while owing a student loan? Till then, goodbye.